everybody. I'm Sarah Potter, president of YouCanTrade. I am so happy to be with you, though it's virtual. This is a great opportunity for us to talk about a topic that is something that I'm very interested in, and I know you all are as well. So first, let me tell you a little bit about me, and then I'm going to introduce James, and we're going to have a fantastic conversation. So first off, I'm a trader, just like you. I've been trading a long time. I started trading just by myself. And over the years, I have done all sorts of different kind of trading styles, trading different asset classes. And today we're here to talk about crypto, which is incredibly exciting. Now, for me, I have traded part-time and full-time. So I'm always looking for opportunities to be able to add to my typical trading plan. So generally I'm trading options, sometimes some stocks, sometimes some futures. So it's always a nice opportunity to be able to learn a little bit more about how I might be able to take advantage of various markets. So with that, I want to introduce James. James is here to chat with me. Hi, James. How are you?
Hi, Sarah. Thanks for having me. Great to be here. We're super excited to be here talking about TradeStation Crypto today.
Awesome. So first, can you tell us a little bit about yourself?
Yeah, so also trader at heart. Got started trading when I was 18 years old. Seems like ages ago now. And I primarily focus on crypto today, but I came up through equities, through Forex, and now crypto. And I used to be more scalp and swing trading. And these days with the crypto markets, I think I'm much more longer term on my view of investing at this moment.
Awesome. So it's awesome to always be able to chat with other traders as well. So, everybody always comes to the market and they say, I'm a trader and I'm an options trader, or I'm a futures trader, I'm a stock trader, I'm a crypto trader. I think it's okay. Would you agree that it's okay to say that you can be all different kinds of a trader?
Yeah, absolutely. I think it's the more you experience the trading markets, the more well-rounded you become. So you may be, for example, I'm much longer term on crypto. I may be much shorter term on stocks or equity. So you can be different profiles depending on what you're interacting with. And I also find that myself, I have different profiles depending on where I'm trading. For example, my retirement accounts, I have one profile of risk and let's say tenure of trades. On my individual accounts, I definitely have a different focus and different risk tolerance. But I tend to wear, I guess, morph between personalities depending on exactly where I'm trading, what I'm trading, and what the market conditions look like.
So do you think that somebody who is kind of happily trading stocks or some more traditional investments, how might they be able to take advantage of some of this crypto boom that we're seeing?
That's a good question. So what we focus on primarily at TradeStation Crypto is to try to make holding cryptocurrencies like Bitcoin or Ethereum as easy as it would be to hold a stock like Apple or Tesla. And so when you look at TradeStation Crypto, our whole function is to provide a simple doorway or pathway for traditional market investors into the crypto space. So TradeStation Crypto would probably be a great place to start. We have a way that you can, through your relationship with TradeStation, engage with all the asset classes that TradeStation Securities offers, as well as the crypto assets for underneath TradeStation Crypto. But when you start to think about how do you get involved, I think look at what you currently do and do well and try to exploit those. And what do I mean by that? If you are a technical analyst trader, don't all of a sudden try to jump to become a fundamental trader. Exploit what you're good at and try to apply that to the market. So I love charts. I typically lead from technicals. So I looked at the technical analysis around cryptocurrencies and started to look at the different patterns that work for me. So things I would use for FX trading, I translated those over to cryptocurrency. That's really how I got started I tried to minimize the variables that I had when I was crossing between asset classes. That allowed me to just focus on learning the behavior of the specific asset. Since then, I've evolved my perspective to become a little bit larger, and I like the excitement of the technology. And I start to look much more on a global macro perspective for all the different things and influences that are happening around the world and trying to theorize how that's going to affect the cryptocurrencies. Because cryptocurrencies trade on a global scale and they trade 24 hours a day, you do need to expand your horizons out to kind of absorb a variety of information. But it's not difficult to get started. I myself am not a huge fan of paper trading. I think there's a great place for it. I like to just take a little bite of the asset and then grow from there. I find that dropping $10 or $50 in there was really what got me to start paying attention to the asset and really figuring out, how do I apply the charts? What are the different fundamentals that are here, and how do we really kind of uncover those? I think it's challenging for cryptocurrency markets. There's not a lot of true fundamentals that you would know in the equities or the futures markets, for example. We have to look at different things like on-chain analysis. So we look for, because public ledgers, we look for how many addresses are created to identify market participation. A lot of folks like to use Metcalfe's law around network effects to try to figure out what the valuation of these assets are. Those are kind of interesting ways to look at the assets, but there's not really a great fundamental view of earnings that you would typically be used to in a stock market. So you look for different things. You look for how many people are participating, where is the general flow of assets, because we can actually look to see, are the assets flowing to an exchange or off an exchange? Meaning, do you see dollars or stable coins flowing to an exchange versus crypto flowing off exchange, and vice versa? You're able to look around the world and see the actual flows of the assets and start to develop yourself a picture. So I may have jumped ahead on some advanced topics there, Sarah. So I think your original question was, how do you get started? I myself like to learn about what's going on, take a little very, very small risk, $10, $20, that puts me in the game, and really to understand what's going on and how is it behaving, and do I really have a hand around it before I scale up my risk?
Yeah, I think that's a really good point. I mean, at YouCanTrade, we have lots of different coaches, and there's all sorts of different ways and styles of trading. And so we're always telling everybody it's the same thing, right? You want to take a dip, not a dive, but a dip in all sorts of different things, and figure out what works best for you, because everybody's trading personality is going to be a little different. You're going to shift your risk depending on what's going on in the markets, but everybody wants to be able to get the most out of the markets they can. And so considering some of those crypto assets is something that you might want to trade. It might be something people want to consider. Now, I have to say though, I mean, we were chatting last week and talking about Bitcoin, and it's been pretty volatile. Now we can also look at all sorts of other indexes, and they've been moving quite a bit as well. So, I mean, what do you think is happening right now in, let's say, Bitcoin?
I think I would start by, the volatility is natural. When you have an asset that runs up so much, I mean, we were middle of last year around $8,000, $9,000, $10,000, and we're now mid 35,000s. It's natural that things don't just go up. I tend to find it scary the faster it runs up, because it means that there's going to be much more volatility. When you see things that are happening like a run up and a correction, 30-40% correction, that's pretty normal, as this is a market and a network that's growing very quickly, specific to Bitcoin. What are some of the underlying things that are happening that are driving this interest? If you look back at the last rallies we've had, in 2013, you were really gambling when you were playing with crypto. There wasn't a lot of information. There weren't a lot of easy service providers to engage with. And that had a good run up and came back. In 2017, most people, that was the first time they were exposed to cryptocurrency, and made headlines all around the world. It still wasn't very easy to interact with. You still had to use your passport with your photograph just to get your accounts open. So the access to the crypto assets just weren't really evolved yet. When you look at 2020, what are some of the differences? You have companies like TradeStation, Square, PayPal. They've all made it extraordinarily easy to engage with crypto assets. So Square, it's right next to your cash in your Square account. PayPal, if you can send dollars to somebody, you can also buy Bitcoin. And TradeStation, the same thing. You can buy crypto assets all underneath the same umbrella. So access is a really important item that's happening right now. On top of that, those kind of retail access. If you were to look at Bitcoin participation prior to Square, Square's a great example. I'm sorry, PayPal. Bitcoin had around 100 million addresses prior to PayPal coming online. PayPal has 300 million users. So the scale of access has increased significantly. And when you kind of boil it down to the real simple elements, it's a shift in demand. And last year we had the halving, so we had a shift in supply. So your demand increased and the supply of Bitcoin decreased with the halving. So those two forces are causing a natural price increase and a natural shortage. When you layer on top of On top of that, companies like Grayscale that are providing a OTC stock that has Bitcoin exposure, those companies also consume a considerable amount of the free floating supply of Bitcoin. And then you layer on a number of seasoned investors. You're going to find like Novogratz, Winklevoss, Paul Tudor Jones, all those guys that are getting involved and engaging in Bitcoin and crypto assets on a large scale and taking them out of circulation for a long-term macro trade. So you have these forces coming together, all trying to get their hands on crypto assets and Bitcoin, and it creates a natural shortage, which causes the price to rise. So as the price rises, people are starting to sell. They're more inclined to sell at 40,000 when they bought something at 1,000. So that fundamental shift in supply and demand has been the main reason that we've driven these assets, the price of these assets up. So it's a natural shift in the supply and demand, and that's really what's causing a lot of the prices to go up. And also having that so accessible to mass market audience has been a big factor. And it's something that's we think is going to continue on at least for the foreseeable future as more and more people get excited. It's creating this network effect and spiral effect as more people get interested, the price goes up, the market cap gets larger, more people are coming in. And as these larger investors are able to play in Bitcoin or other assets that have a larger market cap, those assets are not freely traded. They come in, they acquire them, they put them to the side, and it reduces the overall supply. So that's the primary story that's going on around Bitcoin and its price. And there's a huge macro backdrop going on, which is governments around the world are doing a lot of monetary easing and stimulus to help stimulate their economies, and that's causing asset prices around the world to increase. And Bitcoin is one of the natural beneficiaries of that, along with stocks and real estate. So that's generally, without going into like too craziness, what's happening with Bitcoin, in our opinion.
Okay, so it sounds awesome, but so, all right, I only have, like, let's be real, we're all really busy right now. We're a lot of us are still in lockdown and trying to navigate and multitask like crazy. So there's only so much time during the day. Is there a specific time that's good to trade crypto? Like, when should we really be watching the markets?
So this is a super interesting question. What we normally on an equities or even an FX market or futures market, there's times when there's a lot of volatility, and they tend to be when these markets overlap, meaning like Asia, US, and Europe. In crypto markets, we see trading happening 24 hours a day. So the uniqueness of the market is that you can do your normal work 9 to 5, and you can go and engage in the market when you're done, any day of the week, Saturday, Sunday, Monday, from midnight to 4 a.m. if you wish. We do tend to see, if you look back in time, a lot of the larger runs are initiated on the weekends. So you'll start to see more steady moves on the weekends. During the week, there tends to be a lot more volatility and volume as there's participants that are working on their normal functions of trading. However, it is much more balanced across all 7 days. One of the kind of interesting things is we were open over the Christmas holidays for crypto trading, and we did about 30% of the volume that we did in the entire month of December on that Christmas weekend. There's a lot to do with that. There's no other markets open. There's excitement to be able to engage in it. So people are able to pick up their mobile phone, engage on a weekend on the market, and start to either trade it or invest in it without having to wait till the market to open.
That's amazing. I wonder if everybody realizes that, like how incredible it is that you can actually trade whenever it's good for you. So that's a huge benefit there. Okay, but it can't be all like roses. So are there any challenges here, or should we all just run over right now and put it all over in crypto?
Well, I would never recommend that you all roll over, put it in crypto, but I think without a doubt, there's challenges. The market is still in its adolescent phases. So but 2008 was the kind of the idea of Bitcoin. It's gone through its paces in 2013, 2017, 2020. We are definitely in a better place than we were 10 years ago, but it's still a new technology. We still haven't formulated all the rules that are necessary to make a good market structure. So there's regulation coming out around how the assets are taxed, how do the what are the different behaviors that the companies that engage with the assets need to have. There's rules that are being implemented around how to protect the consumer so that you have free and fair pricing. How do we ensure that there's minimal illicit activities on these assets? So there's a lot of work to try to put a good framework in so that actors know how to engage with the market, and it becomes much more predictable in terms of what to expect. So being that it is new, headlines tend to make big changes. So we're watching now, there's a new chair of the SEC coming in, there's a new Treasury Secretary coming in. So all these have potentials to influence what the market direction looks like on Bitcoin. Different governments around the world are vying for interest in crypto. Some have more interest, some have less interest. So that's where it's still being shaped. And we're really trying to understand as an industry how this is going to be perceived, viewed, interacted with over the next 10, 20, 30 years. This does look like it's something that has a long-term path for it. Doesn't look like it's going to be able to just disappear tomorrow. So it's going through its paces as a maturing market. Other challenges, it's not a lot of information. So if you go back and look at equities markets, we've got 100 years of data and news, and most of the news has been built up around financial markets as we know it today. So we don't have a lot of great sources. We don't yet have the Warren Buffetts of crypto. It's coming. Those people will eventually become more recognized. And we don't have a lot of great news networks that are dedicated to crypto. What we do see is typical on the news, the things that grab headlines, like Bitcoin sold off 30%, it's now in bear market. Those are great headlines, but there doesn't tend to be a lot of meat behind what's being said. So trying to find that information is still an opportunity for you to get an advantage in the space, as there's just not a lot of great information. So where you do your own analysis, you can dig up information and try to find out what's going on. There's still opportunities to gain advantage on information.
Yeah, that's so true. And probably the more we all talk about it, the more it'll come to the front. And it's us as retail traders who can advocate for that. So how does somebody actually place a trade then? If you really want to do this, where do we go? Like, what do you do?
To place a trade? Mm-hmm. So you have a couple of different options. It's great. You have an option to go on exchange, and there's exchanges that are in the US, outside of the US, that you can engage with. Those are going to tend to be a platform like a Coinbase or a Kraken, where you trade, you can only engage in crypto assets, and that's the primary function of that venue. You can go to the likes of a PayPal or a Square, much more simple. Those are going to be more oriented around like banking and saving type products that allow you to just add it to something you're naturally doing. You can come to a firm like TradeStation, and TradeStation has the opportunity for you to, if you already have an existing relationship, you can add a crypto relationship with us. Just simple, open up an account. It's like a couple clicks of a button. You can open up under a single account application all the accounts you need to engage in crypto from TradeStation Crypto and all the other asset classes offered underneath the brand. For me, I prefer platforms that have more trader-oriented features, charting, complex or advanced order types. I prefer to get in the market not using market orders. So I look for things that are limit orders. Maybe I look for bracket orders, something that gives me a little bit more flexibility and control over how I engage in the market. How do I set my risk parameters in the market? So I tend to lean more towards platforms like TradeStation that offer those types of features versus something that's more bank oriented where you just buy at market. So I am more price sensitive. I look for low fees. I look for easy to use tools. I look for control on order types, good charting, ability to earn interest. That's super important. So whenever I'm holding assets, it's really important that I can increase the monetization of those and earn some additional interest. I mean, I love passive income. Who wouldn't? You park your money somewhere and you can earn income. That's one of the great features of trading crypto at TradeStation is you have the ability to earn interest on stable coins, earn interest on crypto assets, and you also have the ability to engage with trades that are going to be not locked into a specific exchange. So TradeStation's brokerage feature allows you to trade across multiple connected venues. So that single order can be broken up and really executed efficiently. So if you're looking to trade and you're looking for a good way to engage the market, check out TradeStation. I think it's a great tool that will give you a lot of flexibility and tools beyond just a simple crypto exchange.
Thank you, James. So just to conclude, for those who want to trade tomorrow, what's one sentence, one message you have for them?
Just take a dip. You will learn a lot just having $10 in the game.
Thank you, everybody. It's been so great to have you, and we look forward to seeing you in the markets.
Thank you very much, Sarah, for having us. It's been a great conversation.